Welcome to LuzFama, the place where truth meets finance and where we uncover the real stories behind the charts, the headlines, and the markets. Today's episode isn't just another market update. What we're witnessing right now is something far bigger, a financial moment that could redefine how people protect, store, and grow their wealth. Around the world, investors are beginning to sense a shift, something building quietly under the surface, and those who understand it early will have the advantage when the wave finally hits. So, if you care about your money, your future, and your financial independence, stay right here, because what we're about to discuss might completely change the way you see gold, silver, and the entire economy. Over the last few months, the financial world has been flashing warning signals. Currencies are fluctuating, central banks are fighting inflation, and debt levels are breaking records across the board. But at the same time, something fascinating is happening. Gold and silver are quietly rising again, not just in price but in importance. This isn't just another rally, it's a signal. Every time uncertainty grows, history reminds us that real value doesn't disappear, it simply shifts. And right now, that shift is pointing toward hard assets, the kind of assets that have survived every economic storm for thousands of years. Now, before we dive deeper, I want to welcome all of you, especially those new to LuzFama. Here, we don't chase hype, we analyze, we understand, and we prepare. We look at patterns that others ignore and connect dots that mainstream media won't. So make sure you stay till the end, because by the time we finish today's discussion, you'll see why some of the smartest financial minds in the world, from Gary Wagner to Peter Schiff, are all saying the same thing: the world is quietly moving back toward gold and silver. Not because it's fashionable, but because trust in fiat money is fading. Think about it. Every time central banks print more money to fix short-term problems, they create long-term damage that someone eventually has to pay for. Inflation doesn't just raise prices, it eats away at confidence. When people lose faith in paper currency, they look for safety in what's real, what's physical, and what has always held value. That's gold and silver. These metals aren't just shiny objects, they're proof of trust. They've been money long before the dollar, the euro, or any digital coin ever existed. And now, as the financial system starts to show cracks, these ancient assets are becoming modern solutions again. Gary Wagner, a respected market analyst, recently explained how gold's recent breakout isn't random, it's the reflection of deep fear and quiet. What both of these experts are saying aligns perfectly with what the charts and trends are telling us. The dollar is losing dominance, inflation isn't truly under control, and investors are tired of playing in a manipulated system. That's why smart money is already moving, quietly, strategically, and early. The big question now is simple: will you recognize this shift before it becomes obvious to everyone else? When you look closely at what's happening, it becomes clear that this is not an ordinary market cycle. What we're seeing is the slow beginning of a financial transformation that will be remembered for decades. Governments, central banks, and large institutions are all preparing for a future where confidence in fiat money continues to weaken. They won't announce it openly, of course, because if the public panics, the system collapses. But their actions speak louder than words. Central banks across Asia and the Middle East are buying gold at record levels. They're not doing it for decoration, they're doing it for survival. They understand that when currencies begin to lose value, gold becomes the ultimate form of insurance. This quiet accumulation tells us something powerful. The people who run the financial system are getting ready for turbulence. The question is, are you? Because while they diversify into gold and silver, most retail investors are still chasing short-term gains in overvalued markets. They're distracted by noise, meme stocks, speculative coins, and empty promises of instant wealth, while the real money is moving silently behind the curtain. This is how every major wealth transfer in history begins, slowly, quietly, and unnoticed by most people until it's too late. Now, let's talk about the psychology behind this. Markets are built on emotion, fear, and greed. When greed dominates, people forget risk. They think the party will never end. But when fear returns, reality hits hard. We saw this in 2008, when housing markets crashed, and we're seeing shades of it again today. The debt is higher, the system is more fragile, and the solutions used last time, like money printing, won't work forever. That's why the smartest investors are positioning themselves early, using assets that have no counterparty risk. You don't need to trust a company or a government for gold or silver to hold value, it simply does. Peter Schiff explained this brilliantly in a recent interview. He said that what's happening now is like a slow-motion version of what happened in the 1970s, when inflation took off, the dollar weakened and gold skyrocketed. The difference is, this time the debt is far bigger and the safety nets are thinner. Governments around the world are already stretched to their limits. They can't raise rates too high without crashing the economy, and they can't print too much without destroying the currency. It's a trap, and gold and silver are the escape routes. Meanwhile, Gary Wagner's technical analysis shows that gold's upward trend isn't just a short-term bounce. The long-term chart has flipped bullish for the first time in years. He points to the way buyers step in every time there's a small dip, a sign that confidence is returning to metals. He also highlights how silver, often the more volatile metal, tends to outperform gold when rallies start gaining strength. That means the silver market could see even bigger percentage gains once momentum kicks in. But here's what most people don't realize. The next big move in gold and silver won't just be about price, it'll be about trust. Once faith in traditional systems begins to crumble, people will turn to assets they can touch, hold, and believe in. The transition won't happen overnight, but when it does, it will be fast and dramatic. History always moves slowly at first, and then suddenly all at once. That's why being early isn't just smart, it's essential. So, if you're watching this right now, you're already ahead of most. You're paying attention while others are still distracted. And that's how real wealth is built, not through luck but through preparation. This isn't financial advice, it's awareness. Because once awareness turns into action, that's where transformation begins. If we look deeper into the financial landscape, the signs are becoming impossible to ignore. Every major market indicator is flashing the same message. Something big is about to change. The bond market, once considered the most stable corner of global finance, is now showing stress signals. Yields are rising because investors no longer trust the long-term promises of governments drowning in debt. At the same time, stock markets are showing artificial strength, kept alive not by real growth, but by speculation and central bank manipulation. This is exactly the kind of environment that historically pushes smart investors toward precious metals. Gold and silver don't need a booming economy to shine. They rise when confidence falls. In the last few months, we've seen massive buying from central banks, not just in small amounts but in record volumes. These institutions know what's coming before the headlines do. They have access to data that the public never sees. When central banks are buying gold instead of dollars, that's a signal worth paying attention to. It means they're preparing for a future where the global financial order looks very different from what we've known for the past 50 years. This is not speculation, it's strategy. And this strategy is exactly what gives us the blueprint to understand what's happening behind the curtain. Peter Schiff made a strong point recently when he said that the US dollar's dominance is living on borrowed time. He explained that you can't keep creating trillions out of thin air without eventually destroying confidence in the currency itself. The illusion of control works until it doesn't. Once faith breaks, recovery becomes nearly impossible. That's why we're already seeing more countries trying to trade outside the US dollar system. They're not doing it to rebel, they're doing it to survive. And gold once again is becoming the neutral bridge between nations that no longer trust paper promises. Meanwhile, silver, often overlooked, is quietly setting up for what could be the biggest breakout of the decade. Unlike gold, silver has a dual role. It's both a precious metal and an industrial one. It's used in solar panels, electric vehicles, and advanced electronics. As technology advances, silver's industrial demand is only increasing. Combine that with its financial appeal during inflationary times, and you have a perfect storm. Gary Wagner has highlighted that silver's chart pattern is forming what's called a long-term base, meaning it's been consolidating for years, building energy for a massive move upward. When that breakout finally happens, let's be honest, most people won't see this coming. The average investor follows trends only after they've already begun. That's why the big institutions win. They plan while everyone else reacts. The opportunity isn't when everyone is talking about gold and silver on the news, it's now when the conversation is quiet. When mainstream media says there's nothing to see here, that's usually when the biggest opportunities are hiding in plain sight. And right now, that's exactly what we're seeing. Think of it like this: every financial collapse in history has a pattern. First comes denial. People think everything will go back to normal. Then comes realization when they see it's too late. And finally comes panic when the herd rushes in all at once. By that time, prices are sky high and opportunities are gone. The real power comes from being early, from studying the data, and from understanding cycles before they become headlines. That's what we're doing here at LuzFama, looking beyond the noise to see the truth forming quietly in the background. So as we continue, keep this in mind: markets are built on perception, but wealth is built on foresight. The people who understand the shift early don't need luck, they need patience. And right now, patience might be the most valuable investment you can make. As we move deeper into this conversation, it's important to understand one thing: markets don't just move because of numbers, they move because of narratives. Every big shift in history began when the story changed, and right now that story is changing faster than ever. For years, we were told that the global economy was stable, that inflation was transitory, and that central banks could control everything with just a few policy tweaks. But the truth is finally catching up. You can't print value. You can't create real wealth by simply adjusting interest rates. Eventually, the illusion fades and the world starts to look for something real, something it can trust. That's where gold and silver come in. In the past few months, we've seen gold not only hold its ground, but break key resistance levels that analysts once thought were impossible without a global crisis. And yet, here we are: no massive war, no visible panic, but a silent wave of fear running underneath the surface. The financial elite see it, central banks see it, the average person doesn't because they're distracted by short-term market noise. Gary Wagner explained this shift beautifully when he said that what's happening now is a quiet panic. It's not loud yet, but it's real, and it's spreading. When institutions start buying physical gold instead of just paper ETFs, it means they no longer trust the system they helped build. They're preparing for counterparty risk, the fear that when they need their money, it might not actually be there. This isn't speculation, it's smart risk management. The same goes for silver, which is showing even stronger accumulation patterns. Historically, when silver starts gaining volume quietly, it's a leading indicator of what's about to happen in the broader metals market. It's like the early tremor before the earthquake. At the same time, fiat currencies are trapped. Governments are. This is why understanding timing matters. You don't want to be the person buying after the headlines hit. By then, prices are already inflated and fear dominates the market. Smart investors act when things are quiet, when it feels boring, because that's when opportunities are hidden. Right now, that's exactly what's happening with precious metals. They're quietly being accumulated by those who know what's coming, while the public chases hype elsewhere. But here's where it gets even more interesting. This isn't just a metal story, it's a confidence story. Once people lose trust in their currencies, they also lose trust in the systems that manage them. That's why we're also seeing an increased interest in decentralized assets, digital stores of value, and new forms of financial independence. Gold and silver represent the old world solution. Blockchain and crypto represent the new world's innovation. And when both trends move in the same direction, toward independence from centralized, so as we head into the next phase of this analysis, keep this perspective in mind. It's not about predicting the next price move, it's about understanding the bigger shift in human behavior. People are preparing, quietly, cautiously, but surely, and those who understand it early will be the ones positioned not just to survive what's coming, but to thrive because of it. As the discussion deepens, one thing becomes crystal clear: we are no longer in a normal market cycle. What's happening now is structural, not temporary. When gold breaks above $4,000 and silver hits new nominal highs, these aren't just numbers flashing on a chart, they're warning signs, signals that the foundation beneath our financial system is shifting. History tells us that such moves don't occur in isolation. They happen when something much bigger is changing behind the scenes. Think about it. For decades, central banks told the world that fiat money, paper currencies backed by nothing but government promises, was enough to maintain stability. But as we watch inflation climb, debt balloon, and currencies weaken, that confidence is eroding. People are realizing that money, when separated from real value, eventually becomes an illusion. You can print paper, but you can't print trust, And once trust fades, people rush back to assets that hold intrinsic worth: gold, silver, and increasingly even decentralized digital assets. Gary Wagner and Peter Schiff both emphasize that we are entering the kind of market environment that comes only once in a generation. Schiff points out that the last time gold performed this strongly was during the 1970s, a period marked by oil shocks, inflation, and monetary confusion. The result back then: gold went from $35 to $850 an ounce. Now imagine what that kind of move would look like in today's world of trillion-dollar debts and global liquidity traps. It wouldn't just be a rally, it would be a reset. And the evidence is already here. Central banks, particularly in Asia and the Middle East, are accumulating gold at record levels. These are not traders chasing short-term profits. These are nations quietly preparing for a post-dollar world, one where global power is no longer defined by how many US treasuries you own, but by how much real value sits in your vault. This is the phase where gold transitions from an investment to a statement. Every ton purchased says, "We no longer trust paper promises," but what makes this even more fascinating is how resilient the metals. Peter Schiff recently said something that perfectly sums this up. When currencies lose their value, gold doesn't rise, the currency just falls. It's a simple truth that most investors ignore until it's too late. Gold is not getting stronger, the dollar is getting weaker. The same goes for silver, which continues to prove that it's more than just an industrial metal. It's a mirror reflecting the strength or weakness of our entire economic structure. For years, Wall Street has dismissed precious metals as outdated. They called them relics of a bygone era, claiming that modern finance had evolved past them. But now those same voices are beginning to change their tone. Major investment firms are quietly rebalancing portfolios, recommending gold allocations for the first time in decades. Why? Because the numbers don't lie. Gold has outperformed most asset classes this year, and silver's momentum is accelerating even faster. The markets are simply recognizing what history has always shown, that when confidence in fiat money fades, gold and silver rise to reclaim their throne. The most powerful shift, however, is not happening in the charts. It's happening in the mindset of people across the world. Everyday investors, for the first time, are beginning to understand that wealth isn't about how many dollars you have, it's about how much purchasing power you can protect. It's about what will still hold value when everything else changes. That's why this phase is not just about price movement, it's about financial sovereignty. As we look ahead, the trend is unmistakable. Central banks are not selling gold, they're buying; governments are not stabilizing debt, they're expanding it; inflation is not disappearing, it's hiding in the shadows of manipulated data, and investors who recognize this reality are quietly moving into assets that can't be printed, inflated, or defaulted on. That's where the next chapter of wealth preservation begins. So as we close today's discussion, remember this: markets can crash, currencies can fail, but value never disappears, it simply changes hands. The question is, whose hands will it end up in? If you found this analysis helpful, make sure to subscribe to LuzFama and turn on notifications. We break down the stories that others ignore, stories that help you see where the real shifts in global finance are happening. Thank you for watching, and remember, in a world of endless paper promises, real value will always shine.